x2.xyz. And we have Olivia here. Olivia, thank you for making your way in here. Welcome to Stable Dash Live.
Yeah,
How's it going?
sure thing. Thank you so much for having me. I've been a fan and a listener for a while and have an eye
Awesome.
for what you're building, seen some of our partners like Charles from Rain and Thomas Cowan from Galaxy. So it feels like a logical continuation to be here today.
Let's go.
Yeah,
Let's go.
I appreciate you reaching out and thanks for your patience coming on the show. So we were just talking about how, talking to somebody from Ava Labs was kind of a full circle moment. For us, Drew, I think you mentioned that it was kind of crucial role for your education in the space. It was my kind of like journey into DeFi way back when Avalanche was watching. What's kind of been your journey with Avalanche and kind of just bring us into the moment you would say Ava Labs in is as a whole? Because I said kind of lovingly, there was this moment where, all these layer ones were competing. It was almost like token wars. My token price is going to go the highest in the bull run. And I've seen Avalanche kind of quiet down, but not in a sense of it was more like, hey, actually, we're not in that DeFi conversation anymore. We are in tokenization. We know we have some product market fit here, and we're focused on building. I don't know if you share a similar sentiment, but yeah, maybe just help us see where you're at and where Ava Labs
Yeah.
is at.
Yeah, sure thing. So first of all, just stepping back for those who are less familiar, Ava Lab company supporting the Avalanche blockchain network. Avalanche is a network of purpose-built layer one blockchains. They offer sub-second finality and the lowest average transaction fees of any major chain as of March. And really the philosophy from the Ava Labs side is to build blockchain solutions for business and be deliberately understated and make Avalanche invisible. Our chief business officer put it this way, that we want to power the products and services behind the scenes the same way that AWS powers Netflix, with adoption driven by tangible economics as opposed to brand recognition. And just for, just to fill out a little bit on my background, I came from Rowe Price to Ava Labs about a year and a half ago. I'm now leading out tokenization within Ava Labs. I'd say up front that our institutional credibility has really predated the RWA narrative. Wisdom
Yep.
Tree, Wellington, Van Eck, KKR, Apollo, all have been building on Avalanche before tokenization became a dominant conversation. And I'd say that track record to date has really given us the foundation to build a really strong network of tech enablement partners that we call, including OpenTrade, which we'll talk about in a bit. But think about B2B and B2B2C companies that are actively connecting to fintechs, neobanks, and enterprises to help them unlock cost savings, capital efficiency, and really new revenue streams through blockchain infrastructure on the back end. And again, the user never sees that it's Avalanche on the back end, and it's really the business that reaps the rewards of new revenue streams or cost efficiencies. And so that's what I'm really excited about for Ava
Mm.
Labs in 2026 and beyond, is really building out, as I call it, this fully embedded on-chain finance stack for real companies, real clients, and volumes that are in production today. And I characterize it in terms of layers, right? At the base of it is the institutional asset issuance we've been working on for years and which are live on Avalanche. It's BlackRock's BIDL, Franklin Templeton's BENJI, Apollo's ACRED, Janus Henderson's JAAA. Again, the largest asset managers in the world that are on chain and really providing the raw material, if you will, that the rest of the stack runs on. And above that, we're building out a yield layer with the OpenTrades of the world, for example, converting idle stablecoin balances into productive treasury assets. And again, giving any Web 2 based fintech 3 to 13% APR yields backed by real world assets through an easy to integrate, single API. The next level I'd call out is that of the credit layer. We've been at Avalanche very focused on enabling a new generation of stablecoin denominated private credit infrastructure that's programmatic, just-in-time funding against real-world receivables. Most of the cost in private credit isn't underwriting, it's operational overhead. So every participant's maintaining their own
Mm.
version of the same data. And the on-chain infrastructure that we've been building out has really been collapsing that entirely. I can go into more detail on it, but think delivering 30% interest savings and 80% lower operational overhead thanks to stable coins on the back end. And then at the last layer I call out is the settlement layer. So think of the Axioms of the world that are eliminating pre-funded account models that really bleed capital across corridors today. And again, thanks to real-time stablecoin settlement. So altogether, each of these layers of the embedded finance stack that I outlined can of course stand alone, but together on Avalanche, they can really, compose into a complete financial infrastructure of yield, credit, asset access, and settlement that are again embeddable through an API with no blockchain expertise, and really work to upgrade businesses again with what happens to be blockchain and tokenization on the back end.
Yeah, that's epic. Man, there is so much we could unpack with that. Probably we could probably create like an
There's a
entire
lot
10-hour
there.
episode on
We're very
just that.
busy.
Yeah, what is embedded finance now? Like that's
We
just
could
like
like
the most
create a
simple
whole
one.
dictionary of terms and like spend like 30 minutes on each of those. It's amazing. I personally, I was curious just to hear, Olivia, from you on just the transition from Rowe Price into Ava Labs. Like, what did that look like? What was the conviction around tokenization for you personally? Bring us a little bit into just the Olivia story with this, and then we can go into some of the specifics around OpenTrade and stuff like that.
Yeah, for sure. So at T Rowe, I was previously in equity research, so very much in the traditional finance world, covering small and mid-cap bank stocks. And when you spend enough time modeling bank balance sheets and understanding how net interest margin gets generated, where the reconciliation overhead lives, and really what T+2 settlement can cost in practice, the inefficiency became really impossible to ignore. And I got really excited about blockchain's ability to not disrupt the financial logic, of course, but really compress the settlement stack and eliminate the reconciliation overhead that I just saw across so many of the banks that I was studying and focus on that are oftentimes based on COBOL based legacy infrastructure. So once I understood that, the move made complete sense. Had been involved in the digital assets working group at T Rowe, and so I came to know the Ava Labs team very well through a pilot that we had done. Again, this was 2022, 2023 era, so very different regulatory regime, and hence why it was a pilot. But I got really excited about the Ava Labs team, many of whom came from Wall Street. There are quite a few folks from Citi on our team, and just really appreciated their expertise and their many years of experience on the ground on
Yeah.
Wall Street and from the world that I came from.
Was that pilot your first exposure to this world of blockchain embedded finance, or was it like, you're already on your off time kind of getting into it, and then this pilot just happened to come across your desk and you're like, this is match made in
Yeah.
heaven?
So I would say that it was not my first time, or rather, it wasn't what sparked my interest in crypto. I've been investing personally since college. One of my friends
Mm.
actually started and launched a tokenized real estate marketplace. And so it was through him that I got to have my first foray and into the space. But I'd say what was really exciting about that pilot was that I got to really experience more of what it means for tokenization to upgrade financial infrastructure. And so that's where I'd say is really that was the, entry point for me into understanding again how blockchain technology, tokenization, which, are quite boring when you think about it,
Mm.
could really upgrade legacy infrastructure.
So going into upgrading now legacy infrastructure and maybe getting into the open trade case study a bit,
Yeah.
we're saying that, hey, this API, you don't need to have any blockchain experience. How have maybe the conversations shifted, and how are these products being introduced? I imagine obviously some of your previous relationships help coming into this, but we've spent so much time 3, 4 years ago focusing on this education gap. This education gap is compressing with products being made with abstracting away the blockchain layer. What has it been like for these companies to actually start embedding these products? And is it easier now? Is it harder in some way?
If you could also,
Yeah.
Olivia, just explain what OpenTrade, that partnership is, that would be helpful
Mhm.
too.
Yeah, absolutely. So just to start off with, like, what is OpenTrade? OpenTrade is one of the tech enablement partners that I alluded to earlier. They are what you would call a yield as a service platform that enable stablecoin holding companies to generate institutional grade returns. So those range from 3% on money market backed products up to 13% on more what I call sophisticated real world asset strategies. But again, it's yield on idle balances through a single integration point and backed by a curated menu of real world assets within a bankruptcy remote legal structure. And they've done a great job on the distribution side They've secured 25 plus live fintech partnerships with this approach, spanning exchanges, neobanks, payroll platforms, and wallets, particularly across LATAM, APAC, Africa, and Europe. And again, through one integration, they give access to these fintechs to 40 plus financial institution relationships, bankruptcy, remote legal protection, and a yield curve that really runs from the risk-free rate to private credit. And that's the product or the service that they're offering, not blockchain tech, not tokenization, or any of the other processes that run on the back end. As far as the problem that OpenTrade's target clients, namely fintechs, we're trying to solve, stablecoin holding companies were sitting on significant uninvested cash positions with no clean path to really deploying them into yield generating assets. So there were two options that were structurally broken, in my opinion. The first option is that of DeFi. So you get programmatic access and reasonable liquidity, but no contracted counterparty, no enforceable legal recourse or collateral structure. And if you're a more conservative, regulated Web 2 based fintech with fiduciary obligations to end users, that's, not a risk management framework. It's really the absence of one. The second option is that of bilateral relationships with financial institutions. That is a hefty process. It entails lengthy KYB, bespoke legal agreements, and just operational complexity that really grows each counterparty that you add. The beauty of OpenTrade is that it collapses that entire cost and operational structure into a single integration. And that's what I got very excited about, because you could ask the question, why wouldn't a Colombian neobank like Littio, which is outlined in the report, just go to Fidelity directly? If you think about Fidelity's institutional money market funds, those are traditionally designed for pension funds, insurance companies, and large corporate treasuries that have scale. If you're a Colombian neobank that, again, is growing rapidly but hasn't achieved that scale, even if they navigated the onboarding, they'd still need to repeat that process for every incremental yield source that they wanted to add. So OpenTrade, again, has already established those relationships, negotiated the legal frameworks, and built out the operational infrastructure so that what would take a fintech 18 months to replicate is available on day one.
Yeah, really, really interesting. The analysis and research that you've spent, all the time you spent learning about the banking industry and like what banks are going through and understanding the pain points they have. This idea of like collapsing the stack down. One of the biggest things that we are trying to explore right now in this show is how institutions like a bank, where they go, what problems they have, how practically they are adopting and updating their systems with things like stablecoins. It sounds like you both have like a history with understanding that business model and are in a lot of the conversations with some of these partners that might be serving institutions like banks. What is the practical moment that we're in with maybe some of these like neobanks or emerging banks around the world? What are you seeing them like struggle with historically that are now being solved with things like stablecoins or bringing tokenization systems into their walls? Like, bring us in a little bit to the things that you're seeing specific to banks right now.
Yeah, absolutely. So I would rephrase the question in terms of, like, isn't this what OpenTrade's doing, just recreating what, banks do, or not even OpenTrade, but the end clients of OpenTrade? And I'd say, yes, those end clients, functionally, the fintechs, yes, are recreating what banks do. And that's kind of the point. Banks have been intermediating between savers and borrowers for centuries. They take deposits, they deploy them into yield generating assets, and they pay depositors the spread. And that model is, not broken. It's one of the most durable financial mechanisms ever designed. But what I would call out is broken is the access layer that's sitting atop of it. So when you think about what it actually takes to access Fidelity money market fund yield today, if you're a fintech that's, operating outside the United States, you need an established legal entity in the right jurisdiction, a prime brokerage relationship, like months of onboarding, legal agreements, and the operational infrastructure to really manage that custody chain. And then you multiply that by every additional yield source that you want to access. So the financial logic is sound, but again, the access architecture is more exclusionary. It was built for a world of bilateral institutional relationships as opposed to programmable APIs. And so again, what OpenTrade is doing is really taking the same centuries old financial mechanism, secured lending against institutional collateral, and rebuilding the access layer from the ground up so that it's interoperable with on-chain infrastructure. But again, also accessible to fintechs anywhere in their existing legacy financial infrastructure, and that doesn't require them to replicate, a year and a half worth of institutional relationship building. And that's all thanks to the structures we have in traditional finance, which is a bankruptcy remote SPC, an FCA regulated fund manager, JP Morgan custody chain, all that's the same financial infrastructure that today underpins traditional, institutional asset management. The difference again is that it's now accessible through a single integration that a neobank in Bogota or a payroll platform in Lagos can deploy in under a month. So yes, in short, this is recreating what banks do, but I think that framing may miss the, more important point, which is that, the innovation was never the financial mechanism. It's really the innovation, is that for the first time, the same yield infrastructure that UK pension funds and US insurance companies have accessed for decades is now available to a distributed workforce platform serving 300,000 workers across emerging markets, or a Colombian neobank with 80,000 plus users who have never had easy access to dollar denominated savings products in their lives. Again, like the financial logic is centuries old, but the access is really what's new.
It seems like such a key pillar for emerging, stablecoin native neobanks or applications that are building from first principles on chain to be able to pipe into systems
Yeah.
and sources of yield like this. Are you seeing the trend of like more because this is a fundamental pillar for like anyone who's building banking or like financial products, like the idea of earning on your money is such a core piece to this being attractive. Are there, do you see this as an emerging trend, like these types of partners, these types of companies that are building strategies or building, API access into yield like this? I'd imagine there might be a handful of others or other partners that are top of mind. Do you see this as like an emerging category? It almost seems like that.
I would definitely say it's an emerging category. And I'd say what has surprised me most about this partnership with OpenTrade, again, they run most of their vaults on Avalanche and we work very closely together. We do a lot of joint business development work together. So I'm in the trenches as well. I have a pipeline of 1,500 fintechs that I'm reaching out to alongside OpenTrade to, get them integrated. But what's really surprised me the most is how fast the demand side signal has appeared. I don't think it's any surprise that, issuance and the supply side of tokenization is pretty well solved for. It's really demand that has been the significant challenge. The demand side signal here has appeared very quickly. OpenTrade's been around for about a year and a half or so. And again, they've accrued over 25 plus fintech partnerships. And the reason that they've found success is that, you can model the addressable market and build the distribution thesis, but what you really can't model is the speed at which a fintech CEO in Colombia or Turkey, immediately understands the value proposition when you put it in front of them. Here, with the API integration and the legal structures being, drawn from traditional finance, there's not as much of an education lag. And also for many of these operators in LATAM and fintech, they're living the problem daily that is currency devaluation or hyperinflationary pressures. And so the conversation really does jump pretty quickly from, does this work, to how fast can we go live with OpenTrade? I think the fastest close was 2 weeks from first call to first deposit. And that's the velocity that really makes the distribution thesis work, in practice as opposed to on paper.
You're really in the trenches, which is amazing. Love
I love that's
what
part of
great
what we
partnership.
love on the business development side is again offering strategic guidance, but also being, doing the hand-to-hand combat, if you will, in terms of
Yeah.
knocking on doors and leveraging our own institutional network, but then of course, going to emerging fintechs and offering a slew of options like OpenTrade that can upgrade their product suite.
I'm thinking, Drew. I'm thinking about a conversation with Bryce from Nube. Did a research report. He had an interesting tagline where he says, amongst treasury managers and emerging markets, only 5% of them had said that yield was one of their concerns when
Hmm.
integrating stable coins. Obviously, treasury managers are quite a different ICP as fintechs with embedded finance. I just think it's interesting that within the span of 2 weeks, we've seen two categories using this similar infrastructure and similar products that have two vastly different, really, reasons to care
Mhm.
about stablecoins and what they enable.
Yeah.
So, in this embedded finance conversation, I think what's something that Drew and I think a lot of, we've talked with Ben from Braille about this a lot, where it's good business to integrate stablecoins in your platform, to bring in a net new revenue stream, to offer yield to your clients. But where do we go from here? What is that next
Yeah.
leg in not only embedded finance, but I think what we're seeing, Ron from Key Rails was talking about this a lot, was obviously credit, trade financing, and for his use case in emerging markets. We've talked about Credit Coop with financing for payments
Mhm.
companies like Rain and Moto. Where are you seeing that next leg in the conversation?
Yeah, I mean, I'd say over the next couple of years, there will be a few compounding vectors, particularly for open trade. First of all, I think there'll be continued expansion into APAC, same or similar stablecoin native user base with unmet yield demand and which exists, at a scale that one might argue could dwarf LATAM. I'd say second of all, there will be more product expansion as the tokenized asset universe grows that'll, continue to deepen OpenTrade's yield menu and others. And then, of course, everyone talks about the regulatory piece, but I think regulatory consolidation as MiCA, Genius Act, and equivalent frameworks mature globally, under collateralized products get pushed out and potentially concentrate AUM into structures like that of open trades. So I'd say that there are really the three vectors, that are compounding simultaneously: APAC and LATAM continued expansion, product depth as these tokenized assets grow, and then also, just regulatory consolidation helping to eliminate some of the historical competition.
Olivia, as we close here, when we think about the case to be made for working with Ava Labs right now and the type of experience that you want to give to partners or to people that are in the position of open trade, it's awesome to hear that you are taking such an active role in accelerating the business of a company like open trade. When you're talking to partners, even on days like today, when you're in decision making point as these partners are looking around the ecosystem, blockchains, where are they going to build, who are they going to wrap arms with and go do this thing. What's the pitch that you have these days to builders like OpenTrade? How are you positioning Avalanche as a partner? What are you finding that is really tipping the scales toward going and building really closely with you guys? What does that message look like right now?
Yeah, absolutely. So I'd say on the one hand, from a more technical or an architectural perspective, Avalanche is EVM compatible, so pretty easy to integrate with if you're an institution that may have been building on Hyperledger before or on Ethereum or on L2s. In addition to that, I think it's very important that Avalanche's architecture offers sub-second finality and more specifically deterministic finality. Particularly EU regulators care quite a bit about that. And then, of course, there's inexpensive transaction fees. As I mentioned earlier, average transaction costs were, among the lowest of leading chains as of March. So that's the architectural perspective. From an ecosystem perspective, we have, integrations with all the top tier DeFi or blue chip DeFi protocols, an array of USD and non-USD stables and other tech partners that can help a project really scale quickly and benefit from, introductions to those in the ecosystem that may have built, a similar product or service before. What I would say from an Ava Labs perspective is where we shine is really serving as a strategic advisor to projects that are new to the ecosystem or new to blockchain, and again, want to find ways to bring their existing business on chain and unlock cost efficiencies or new revenue streams. And so
Mm.
to do that, it really does look like I mentioned earlier, taking a very hands-on approach from a business development team standpoint, working closely with teams to ensure their success, be it on the distribution or business development side. Like I said, I'm targeting 1,500 plus fintechs with my team. and working very closely with OpenTrade, Axiom, Denari does tokenized U.S. equities, and these other partners of ours who have products and services that these fintechs want and need. And then in addition to that, considering ways that we can support in terms of making relevant introductions to tokenization platforms or Oracle providers or all the things that as a Web2 legacy player, you might not know or have connections to, and that we can easily make those introductions for and get you up to speed quickly and efficiently. So I'd say first part of it, first part of the pitch is really the strong tech and architecture. And then the biggest pitch for the Ava Labs BD team is just how hands we are in terms of ensuring the success of a project that wants to build on Avalanche.
I remember a few years ago, and I've seen them pop up, the thesis of the Avalanche side chains. How relevant is that today, especially in the context of tokenization and
Yeah.
approving some of these larger RWA players?
Yeah. So for everyone's guide, Avalanche is a network of layer one blockchains. Our public permissionless chain is called the C chain. That's where much of the liquidity lives. That's where much of the blue chip DeFi protocols, stablecoin supply exists. And so OpenTrade vaults, for example, that Ontop, which is a global payroll provider, and Littio, which is a circle backed, YC backed Colombian neobank, those types will generally leverage the assets that OpenTrade and others provide on our public permissionless C chain. I'd say where the purpose-built layer one blockchains are most important are for institutions or government entities, for example, that require very stringent privacy demands or privacy requirements that have to be baked in at the chain level, KYC baked in at the chain level, some of the constraints on where validators can be located. And so I'd say for the more institutional enterprise or government entities that, again, require privacy or granular permissioning at the chain level, those are the types that are building layer ones. Or another example that I just put out there is that if you're a project that's doing very well on the Avalanche C chain and, has concerns about congestion, you might also consider building out a layer one blockchain in a more isolated environment. FIFA is one such example. They're doing a number of initiatives on their layer one, including digital collectibles and other elements. But, that's one reason that they decided to build their own sovereign blockchain, was because they wanted their own, environment to operate on.
So interesting. That's probably worth a follow-up call in the near future.
Yeah.
If anybody else comes out
Happy
with a
to come
side chain,
back.
because I could, that one is more of a personal, just interesting category when we're talking about how did people build and architect on chain.
Yeah. Olivia,
Absolutely.
we'll absolutely have you back. You're extremely well
Thank you.
spoken. I like how you see the picture
Thank
of
you.
like the macro side of how these pieces fit together, but also it sounds very Gary V of me, like macro and micro, like the clouds and the dirt. I think that's how he says
I
it. Is
love
you know the game and like can see macro, but you're also like cold calling with OpenTrade and like in the weeds of the dirt with scaling this out. I appreciate that. I resonate with that, and yeah, we'd love to have you back on the show again.
Thank
Thanks for
you.
making the
Would
time.
love to be back. Thank you guys
Thanks,
for
Olivia.
having me.